into Africa's business and financial markets. I'm Uche Okonronkwo, coming to you from Kenya's capital, Nairobi. Let's start with a look at the markets. Now, emerging market stocks made some cautious gains today on the back of reports that Sino-US trade negotiators have started to tackle their toughest issues. Now, MSCI's emerging market index rose about 0.25% today, touching a 3-week high. On the continent, South Africa's JSE pretty flat as markets digested the implications of Wednesday's budget policy statement. Now, it seems like investors are welcoming the government's plans for struggling state-owned enterprises like Eskom. Now, also coming up on the show today, Tanzania rebases its economy to the year 2015. Saudi Prince Salman is on a state visit to China. And Hyundai enters the East African market with its first assembly plant in Ethiopia. Well, let's start off the show in Tanzania. The country has changed the base year it uses to calculate economic output to 2015. Now, data from the country's National Bureau of Statistics shows its economy was 3.8% larger in that year. The Bureau reportedly changed the base year from 2007 previously and calculated the economy size in 2015 at about $40.56 billion at current prices. Now, that's up from about $39.05 billion using 2007 as the base year. Tanzania's last rebased its economy in 2014. The Statistics Office says that based on constant 2015 prices, the country's gross domestic product was about 107.67 trillion Tanzanian shillings in 2017. Well, let's find out more on this from Daniel Kijo in Dar es Salaam. Very welcome to the show, Daniel. Now, after that rebasing, GDP numbers for 2017 basically doubled, as we mentioned, from about 50 trillion Tanzanian shillings to about 100 trillion shillings post-rebasing. Now, give us a sense, Daniel, of what economic activities previously not incorporated in the economic data were brought on board now or upgraded in terms of their contribution to GDP.
Hello, Uche. Now, firstly, just to demystify the procedure, this is a statistical legal requirement and it is being implemented very timely. Experts say that using the 2015 base is a good choice as it was a very stable year when it comes to inflation. And it's a way to see sectorial structural changes to the economy. Now, the environment now has become more favorable to construction and the industrial sectors, which have noted to be greater contributors to the economy currently. Now, initially, the service industry, which was a big contributor, has now declined from contributing 48% to now 40%.
Well, Daniel, it does seem like this rebasing exercise revealed that Tanzania's economy is growing slower than initially thought. The National Bureau of Statistics actually revised the country's growth projections downwards. So give us a sense of how the rebasing has impacted growth forecasts of the country.
Uche, it gives 2015 a higher base than it was before going forward. Those new activities that are being looked at in 2016-17 onwards, and it has changed the benchmark. Revisions of the growth are not too significant. In 2018, it was 7.1% by the National Bureau of Statistics in the report, which is still quite strong, while in 2017 it was initially 7%. So it may not have gotten a slight revision, but the exercise has not been too significantly impacting the GDP forecast, but it has put a better foundation to capture growth going forward because it is giving a more representative structure of the economy and capturing a broader base of the activities now, currently, as we speak.
Well, as we mentioned, Daniel, agriculture, service sectors, they actually saw a slight fall post-rebasing, which means they're contributing much less to the economy than they were initially. Industry and construction, they actually expanded their contribution. Has any of these developments impacted on the government's fiscal position and certainly its fiscal plans for this year and going forward?
Well, Uche, it reflects the economy in a period between 2007 and 2015, and has been more value chain and activities around industry and construction, as you said, that have increased in market share in the GDP and have taken over activities like agriculture, forestry, and fishing. So it means that for that period, a lot of the resources and investments were going into construction services like road construction, bridges, etc., and industrial manufacturing-based expansions. The regression you talked about in agriculture is an indicator that the growth in industries have not been agro-based businesses, because if they were, the sector would have grown simultaneously with the other sectors we touched on. So we know that agriculture employs 60% of the economy. So going forward, as much as the government is focusing on these other sectors, that it will have to consider how to invest further in the agricultural sector so as to boost the sector, and being it's an area that employs the most and has the biggest impact on the population. It is generally a very big employer. So in the next, maybe 5 to 10 years, agro-processing industry, for instance, would be key to sort of tie in industry and agriculture. But as it stands, so far, we don't see any, as far as this year, we don't see the government sort of addressing this opportunity.
Well, many thanks, Daniel, for your insights. Of course, that was Daniel Kijo joining us there in Dar es Salaam. Well, let's head to South Africa now. The country's finance minister has announced the country's national budget, which saw an increase in expenditure by about 6.2% for the infrastructure sector. Now, that's not such good news for a sector still in recession. Here's Angelo Coppola explaining.
Economists say that the increase is nominal, considering that the country's inflation rate is around 5%. And that's despite President Ramaphosa talking about the need to shift spending from personnel to infrastructure development. But the president is limited in what he can do.
We have a situation where he cannot govern without the consent of his opponents inside the ANC. And that limits his capacity, both as ANC president and president of the country, to implement his vision.
And this limitation is evident in the budget allocation to infrastructure.
If you look at the actual numbers that are included in the three-year budgetary forecast, you don't see that actually emerging. It's more of the same. The share of public investment within overall government spending remains more or less constant. And the three-year forecast of public investment is only 4.5% higher in rand terms than it was in last year's budget.
The local construction sector has gone through significant downsizing, and this latest national budget hasn't instilled any confidence, especially at a municipal level.
So even though the money is there, a large chunk of them are not spending the money because they lack the skills or the ability to get their procurement practices right. And of course the other part, which is on the private sector investment,
The issue around spending at municipal level. I'm Angelo Coppola for CGTN in Johannesburg, South Africa.
Now, brave and pragmatic. That's how the Reserve Bank of Zimbabwe's decision to scrap the bond note dollar peg has been described. Now, from Friday, the quasi-currency will be floated at a market-determined rate on an interbank foreign exchange market. Here's CGTN's Farai Mwakutuya with more.
The long overdue measure will help improve the efficiency of foreign currency allocation.
The reality is that Zimbabwe is not short of foreign exchange, but we have not had a mechanism by which holders of foreign exchange can legally trade with those people who need foreign exchange.
The new system has been welcomed by industries that have been struggling to access foreign currency through official channels and that were unable to purchase it off the illegal black market. The interbank rate is expected to open below the parallel market's prevailing 4-to-1, a reduction that will help tame rapidly rising inflation.
The variables that are clear to us is the inflation. And in Zimbabwe, the best way of managing inflation is to ensure that the foreign exchange is available, that the rate is stable. That is the best way of preserving value for money.
The central bank has also monetized electronic bank balances, effectively converting them into one of the numerous currencies accepted as legal tender here. There had been anxiety over doing so because of the potential losses to depositors.
This was a very bold move. Obviously, for those people who are holders of large amounts of money, I think they need to go into a conversation with the monetary authorities. But for every other Zimbabwean, as long as you are not an importer, an exporter, I think the effects there are minimal.
For these latest policy interventions to work, though, two crucial ingredients that have previously been in short supply are required. They are trust and consistency.
It is now up to government not to spend more than it means, but it also is up to the Reserve Bank to make sure that they don't allow government to put in any requests that are beyond the capacity of the country to generate.
Treasury succeeded in balancing its books in the last 3 months of 2018, a trend that, if maintained, could help the country emerge from its protracted currency crisis. Farai, CGTN, Harare, Zimbabwe.
Now look at our corporate headlines today. Platinum producer Lonmin says it has received notice for a sympathy strike from the Association of Mine Workers and Construction Union. Now AMCU plans to support an ongoing stay away at Sibanye Stillwater. The sympathy strike is expected to commence from next Thursday until March 7th. Thousands of AMCU members at Sibanye in Britain and the US. The money will cover separate probes into breaches of US sanctions and foreign exchange trading issues. It also covers a $133 million fine from the UK's Financial Conduct Authority related to financial crime controls. And Barclays has reported a profit. The long-term debt score is still stable. And that's a look at our corporate headlines. Let's take a quick break now. Still to come. Nigeria demands billions of dollars in back taxes from several foreign oil and gas companies. And Egypt signs a $2 billion deal to build 15 Chinese leather factories.
The world economy as we know it is about to change. Global business reports highlight emerging markets, developing countries, and dynamic sectors worldwide. We feature top analysts and newsmakers to provide perspectives on every facet of business. From an on-the-ground perspective, we provide you with balanced and objective assessments. Fast, sharp, and insightful. Global business. Only on CGTN.
Every story starts out like this.
Okay. We'll head up now.
But beyond the rush of the numbers, there's always a more fundamental question. What happened? Who has been affected? When market-moving decisions are made, who's responsible? And why?
Let's get some reaction on ground. Joining us in Johannesburg is Sutra Naidoo. Hello, Nairobi.
This is how all stories begin. See how they end. only on Global Business.
There's more to this place than just glorious landscapes. There's more to it than just, say, Table Mountain or glorious, endless salt flats. There's more to it than countries that are home to some of the deepest mines in the world. There is so much more to this place, even if it is home to some of the finest diamonds on the planet. It is the sheer diversity of the people who call Southern Africa home, and the relentless drive to make it a better place that make it so special. And we know that because this too is home. No one knows Southern Africa like we do. CGTN. See the difference.
Africa is the nexus of enterprise, and Global Business will tell you why it matters.
From mega investment projects to multi-billion-dollar mergers and acquisitions.
Africa today collects, just in terms of revenues from taxes alone, $545 billion a year. If you take 10% of that, you devote it to the energy sector, problem solved.
All this on Global Business, weekdays at this time on CGTN. Welcome back. Now let's head to Nigeria, where the country has ordered foreign oil and gas companies to pay nearly $20 billion in back taxes it says are owed to local states. Now the charge comes after the central Nigerian government and local states settled a dispute over the distribution of revenue from hydrocarbon production. Now, energy companies investing in Nigeria have been negotiating production sharing agreements with the government to develop and operate giant offshore fields. Well, let's get more insight into the story. We're joined by Deji Badmus in Lagos. Deji, welcome to the show. What do you make of this $20 billion tax bill for international oil companies? Some say it's an attempt by the federal government to pay in money that it owes to states for hydrocarbon production. Did this announcement come as a surprise to stakeholders in the oil and gas sector?
Well, Uche, I wouldn't say these oil companies now did not see this coming, because the government has actually been on this issue for quite a while. It's public knowledge that the government has always maintained that some of these oil companies have not been paying royalties. And towards the end of last year, the government decided to ramp up revenue collection now from the oil industry, and it was able to get some of these companies now to pay their backlog of royalties. Of course, some of them have not paid, and I remember that in February, this February, about 2 or 3 weeks ago, the Minister of State for Petroleum, Ibe Kachuku, actually gave the oil companies a deadline, giving them basically 30 days beginning from February the 12th to pay up their royalties. So I don't think it's something new. The oil companies saw this coming, and the fact is that the government has always maintained that some of them have actually not been paying their royalties, and they've actually not been paying their own fair share of the production sharing contract. So this is not something new. The oil companies might say it's strange, but to be candid, it's something that the government has been talking about for quite a while. And the government says, look, a lot of companies have paid, that you only have about 4 or 5 companies that are still in default and have actually not paid. And I think that's why it is decided to do this. This notice was actually given a while back and not recently.
Well, the reality is, Deji, Nigeria is heading into an election this weekend. And of course, each of the different contenders could mean very different outcomes for Nigeria's oil and gas sector. How do you expect each will handle this issue when the election comes to an end?
Well, I don't expect any of them to handle it differently than the way the government is currently handling it. The fact is that Nigeria needs to generate more revenue from oil. As you're aware, Uche, Nigeria, of course, has agreed that it's going to be cutting down on its production quota just to ensure that the price of oil rises. And then you talk about the OPEC quota. So, and for a long time, the government has always maintained that there's been some leakages and this issue of royalties. So what it has now done is to get the Department of Petroleum Resources now to plug these leakages. And it's also set up, as we know, a monitoring system where it is able to really see in real time the amount of oil produced in this country and the amount of oil exported. So I do not think any of the candidates, for instance, I do not think, for instance, that Atiku Abubakar of the PDP would want to handle this differently, because he's consistently maintained that he's going to sell off, for instance, the NNPC to ensure that he generates revenue and to ensure that the oil industry works better for Nigeria to get more money. So since this is all about revenue, it is difficult to see how, for instance, an Atiku Abubakar's presidency would handle this differently, because the fact is that Nigeria would want to make as much as it can from oil, and it's actually not making so much at the moment, and all of this is just geared towards ramping up revenue. So if you ask me, I think any government that comes in place after May the 29th would definitely adopt the same strategy.
Well, despite that, and of course that February deadline set by the Petroleum Minister, some of
for leather.
All the stages of producing leather are found in a zone here. The first stage is the beam house to clean the raw leather, followed by another stage, which is dew stuff to prepare the color and texture of the leather, according to the client's request. And the final stage is packaging and delivery, for the clients who turn leather into finished products, such as bags and shoes.
Talking to one of the owners of the 150 plants there, he says they're looking forward for the Chinese investments in the zone.
There are different factories that will produce leather products like shoes and bags. They will also produce the components of the shoes like laces and threads, or belts and wallets. These factories, with their huge production capabilities, will place Egypt on the international leather market.
The Chinese factories have been awarded 1 million meters in the city. Investments are expected to reach over $2 billion.
The Chinese companies have the know-how to build a modern leather industry. Egypt imports all components of the leather production except the raw leather itself. These factories will allow Egypt to produce all the components here without the need for importing.
Besides the leather tanning and final products, feeder industries like chemicals will be established to serve the factories here. Most of the production from the Chinese factories will be exported to the African neighbors, and Egypt hopes this will help boost the products and exports of leather products from Egypt that stands at $200 million. Yes, Hakeem for CGTN, Cairo.
You're watching Global Business Africa. Let's head into a short break now. Still coming up. Saudi Prince Salman is on a state visit to China. And we're at a cryptocurrency summit in Istanbul. Stay with us.
Business in Africa is at a crossroads. We celebrate those who are adopting and thriving despite challenges, from grassroots to big businesses. Global Business takes you along for the ride as we track the making of a giant.
Only on CGTN.
How will your world change today? What happens here? What happens there? Or what you make happen for yourself? If it matters to you, it matters to us too. Your stories are the stories that need to be told. Africa Live. Find your voice.
Accra is my kind of city. That's because whenever I feel like I'm back home in Lagos or Abidjan, which are two of the major cities I grew up in. Business in Africa. After about a decade covering business news on the continent, I've learned it's all about the high risk, but also the high returns and the high energy. You simply have to adjust in order to keep pace. When I started out as a journalist, my dream was to open people's minds to the different perspectives. From the CEO in the boardroom to the trader out in the street, we all have different stories. From Accra to Addis Ababa, from Cairo to Cape Town, and I wouldn't have it any other way. Here at CGTN, we realize that Africa is on the move, and it's moving fast, but we're moving right along with it. I'm Uche Okonronkwo, and I'm a business anchor and reporter at CGTN. Now, the Saudi Crown Prince is on a two-day visit to China, the third leg of his Asia tour after trips to Pakistan and India. Mohammed bin Salman will meet with Chinese President Xi Jinping and Vice Premier Han Zheng during his visit. He will also co-chair the third meeting of the China-Saudi Arabia High-Level Joint Committee with Han and witness the signing of a series of deals. Now, in-depth integration between Saudi Arabia's own development plan called Saudi Vision 2030 and China's Belt and Road Initiative is also on the prince's agenda. Diplomatic relations between China and Saudi Arabia were established in 1990 and then elevated to a comprehensive strategic partnership in 2016. Now, a new pattern of cooperation between China and Saudi Arabia is taking shape as the two nations strive to enrich their comprehensive strategic partnership. Here's CGTN's Zhu Yun with that story.
Hope without action is like a tree without fruits, a famous Arabic proverb quoted and echoed by senior officials from both sides at the China and Saudi Arabian Economic and Financial Dialogue Thursday. Both sides agreed to carry out tangible steps to enhance bilateral ties and make the tree of cooperation fruitful and prosperous. Zhou Jiayi, Chinese Vice Finance Minister, said that China looks forward to further strengthening its economic relationship with Saudi Arabia. Areas of focus include deepening communication on macroeconomic policies, providing finance and taxation support for investments, as well as using constructive cooperation to fight protectionism and unilateralism.
With the global economy facing greater downward pressure and multilateralism facing more risks, both China and Saudi Arabia should uphold multilateralism firmly and consolidate the role of the G20 as the major platform for economic cooperation.
Saudi Arabian Deputy Minister of Finance Hamad El-Bazai says that China always plays an important role in the landscape of the global economy, with its policies prudently balanced. And China is one of Saudi Arabia's biggest trading partners, and he hopes that the dialogue will inject new vitality into the bilateral economic ties.
Since both countries have shared goals for development, I agree that we should increase bilateral investment, and we put great emphasis on cooperation with China in every aspect.
Whenever we talk about the economic ties between China and Saudi Arabia, what usually dominates the topic is energy. And now, with the relationship between the two countries continuing to enhance, there are wide expectations that space for economic cooperation is going to become more dynamic and comprehensive. So, CGTN, Beijing.
Now, much has been talked about the spending power of China's new generation, but another group that is set to drive the country's consumption growth are singletons. Reports state that singles in China feel less pressure and have the propensity to spend more on themselves. Well, our Wei Lin Tang speaks to two single people to find out if this is true and what tickles their consumption fancy.
32-year-old Jasmine Tu just bought her first apartment. Consulting with an interior designer, she wants her new home to look nice. And she doesn't intend to pinch pennies, saying she has enough savings and disposable income to spend.
Because I'm single, I think I
would be more free about choose what I would like, because I don't need to think twice about what I want to buy. I don't really need to take consideration about someone else.
Jasmine is attached to a foreign bank. She recently signed up for a gym membership, paying 6,000 yuan for 3 months, which she says she can afford. Passing on girly stuff like cosmetics, Jasmine is more than willing to spend and invest in her favorite hobby, photography.
This is all the photos I took, and this in Beijing, Shanghai, and this is my camera. I bought it maybe 4 years ago. When I broke up with my friend, that when I became single, I gave the choice to do what I like, so I bought it, and now I want to upgrade to a new one because I got the financial situation to do it.
Being single may lead to impulsive consumption. Jasmine recalls having made spontaneous trips to other provinces, driven by the convenience of mobile apps. 26-year-old Mason likes to travel too, but with a companion. He spends up to 40% of his income on food and drinks, and the rest on clothes and shoes. Mason says he would spend the same amount of money, if not more, if he were in a relationship, just on different things.
When I had my girlfriend, I think the most important thing is I want her to be happy. So there are a lot of holidays, and there are a lot of days that I would want to celebrate, and anniversary days or everything. But if I stay with myself and just go chilling with my friends, and we go to club and we go to bars, I still a lot of money to buy drinks.
He believes young married couples without children are the biggest spenders. He and Jasmine may not represent China's entire single population, but the message is clear.
Because they're willing to spend, and they have the desire to spend. Because the old generation, they will save up and for the children, for the next generation. But we don't think about that.
Consumption now contributes 76% to China's economic growth, an increase from less than 50% almost a decade ago. Meanwhile, the number of single people in China has also been rising. At 220 million, it accounts for 15% of the country's population. Observers say this rising group of single people has been earmarked as a window to China's future consumption trends. Wei Lin Tang, CGTN, Chengdu.
Well, let's get the latest from Brexit now. With only 37 days until the UK exits the EU, British Prime Minister Theresa May says that she has held constructive talks with European Commission President Jean-Claude Juncker. Now, May was in Brussels on Wednesday seeking concessions from a sceptical European Union. CGTN's Richard Bestick brings us the latest.
It's probably fair to say that expectations from Theresa May's Brussels outing were always going to be low. European Commission President Jean-Claude Juncker has said yet again in public that the chances of progress are slim. Mrs May is clear enough in her intentions. She wants to reopen the deal that was hammered out over 2 years of negotiations.
I've underlined the need for us to see legally binding changes to the backstop that ensure that it cannot be indefinite. That's what is required if a deal is to pass the House of Commons. We've agreed that work to find a solution will continue at pace. Time is of the essence, and it's in both our interests that when the UK leaves the EU, it does so in an orderly way.
It's possible Mrs May could come home with some non-legally binding assurances, but they'd likely fall far short of bringing on side the Brexit hardliners in her parliamentary party. All this as 3 of Mrs May's members of Parliament resigned from the party in protest at her handling of Brexit. Further evidence, if it were needed, that the fabric of British politics is beginning to unravel under the stresses and strains of Brexit. Their dramatic departure from the ranks of the ruling Conservatives followed hard on the heels of 8 members from the Labour opposition resigning for 2 reasons: racism in the party. None of this fundamentally changes the arithmetic of voting on Brexit in Parliament. Another critical vote next week, by the way, but it's a measure of the precarious nature of British politics, which Brexit negotiators in Brussels find so very alarming. Richard Bestick, CGTN, London.
Let's shift our focus now to cryptocurrencies and blockchain technology. The two have received lots of interest worldwide in recent months, Volatility and some security concerns make cryptocurrencies risky investments, but still many people around the world are jumping on board. Well, CGTN's Mikhail Bardavid has more from the Blockchain Economy Istanbul Summit.
The Blockchain Economy Istanbul Summit was held on February 20th with a full day of presentations from dozens of international experts. Turkish and foreign investors, banking officials, entrepreneurs, and professionals working in the financial industry participated in the summit. Presenters here focused on the current and future trends of the cryptocurrency market and blockchain technology, while also addressing some global challenges as well. One session by Wall Street analyst Tom Lee described the revolution of the finance system, while another tried to describe why capital markets really need blockchain. Over the past few years, global large institutions and corporations have begun cooperating with blockchain projects. Some experts in the field of cryptocurrency, such as Cal Evans, says decentralization is critical for the survival of such companies.
We're starting to see this trickle of modern companies starting to get up to date with the new technology. And if they fail to do it, the larger institutions really will fall a death to decentralization, because ultimately things are always done at the cheapest possible price, and decentralization enables things to be done very cheaply and very effectively, and so that's why these organizations would need to catch up.
But there are risks and challenges in cryptocurrencies. The market is extremely volatile. Bitcoin, the first major cryptocurrency, soared to peak at around $20,000 per coin in December 2017 and has stumbled to around $4,000 in the first few months of 2019. Evans points out that one of the challenges cryptocurrencies face is related to perception.
The perception in some countries is that cryptocurrencies are bad because people trust their money either being run, maintained, or
Now, the Hyundai Motor Company has set up the first assembly plant in East Africa. It will be based in the capital Addis Ababa and is expected to assemble about 10,000 cars a year. Well, CGTN's Gerum Chale tells us just how the country will benefit from this new plant.
At full capacity, Hyundai Motor Company's new Addis Ababa-based plant is expected to assemble 10,000 Hyundai sedans, SUVs and mid-buses per annum. And it is Hyundai's sole agent in Ethiopia, Marathon Motor Engineering, which is behind it. Chairman of Marathon Motor Engineering, Olympic champion Haile Gebrselassie says this is an important investment for Ethiopia.
Over the last 10 years, we have been simply importing and selling cars in this country, but we were always contemplating what we should do for Ethiopia in this sector. Remember, it is the importing and selling that has been profitable for us, but for this venture, we do not know anything about the profits. However, we are sure it has helped transfer skills for our youth.
Hyundai already has a strong presence in Africa, in countries such as Algeria and South Africa. Hyundai Motor Company's CEO, Won Hye Lee, however, said his company is impressed by Ethiopia's potential for the growth of the car manufacturing sector.
We have a presence in North Africa, especially in Egypt and Morocco, Algeria. We have a CKD plant, and also we have a CKD plant in South Africa, but we do not have, assembly plant in Mid-Africa. So now it's time to explore our, the footprint in Mid-Africa, starting from Ethiopia assembly plant.
From putting this close to $20 million car assembly plant to the actual engineers who assemble these cars, it is all locals who are involved.
We were trained for 4 months, after which we were deployed to the production line here. Assembling cars is new for us, but we are doing just fine.
Hyundai is one of the top 5 global car brands, and the cars are mostly electric, so the whole environment give us a great opportunity to update our knowledge and skills.
Hyundai and Marathon Motor envision the best for the future too.
The 10 years work has got us here, and in the next 10 years, our company Marathon Motors is planning to produce tires, car batteries, and other car parts. For that, we have able manpower from within the country.
Within few years, I think in near future, there's the eco-friendly vehicle demand also in Ethiopia. So we have not only for combustion engine product, but also we believe the many potential. Ethiopia has many potential for eco-friendly vehicle.
There is an attractive incentive package for investors who would like to put their money in industry development in Ethiopia. Also, the car manufacturing sector itself has been given proper attention and support from authorities here. That is why, apart from Hyundai, Peugeot and Volkswagen are already on board. Group CGTN, Addis Ababa, Ethiopia.
Now, before we go, let's take a quick look at Africa's currencies today. We saw South Africa's rand rebounding, as of course traders are betting that the budget announcement will persuade ratings agencies like Moody's not to downgrade the country's debt to junk status next month. Also interesting to note, Zimbabwe scrapped the peg between its quasi-currency bond note and the US dollar. Now today, $1 fetched up to around 3.50 bond notes on the street. Traders, of course, are watching closely to see if it will slide sharply in the coming days. Well, that's it for this edition of Global Business Africa. Remember, you can send your feedback to the contacts on your screen. You can also follow us on our various digital media platforms. From me, Uche Okonronkwo, and the rest of the team, thanks for watching.